Okay, welcome to Bamboo Wealth, Financial Planning Matters YouTube channel. Thank you for being with us once again. My name is Sam Tabbert, your host, Certified Financial Planner. Before we start, just wanted to remind our viewers that this is general advice, and it's not particular for your individual circumstances, and it's for education purposes rather than personal advice. Today we have a special guest, Maree Cridland. Thank you for being here, Maree.
Thank you for having me.
And today's episode will be discussing the value of investment bonds, or also known as friendly society bonds, or also insurance bonds, from my understanding. Thanks for being with us today. Just want to ask you, how are you today?
I'm good, thank you. Very
Excellent.
good.
I wanted to just if you can give our audience an introduction about yourself and your role
Sure.
at Generation Life.
Absolutely. So I'm Maree. I've been at Generation Life for 5 years. Generation Life are a specialist issuer of investment bonds. We've been in operation for 17 years, and it's the only product that we actually operate with. So we like to think that we know what we're talking about when talking to advisors.
Okay, excellent. Thanks, Maria. Maria is obviously an expert. She does this on a regular basis, sees a lot of advisors to educate them about the particular needs of these particular products. And there are a lot of different products out there that deal with investments. Maria's been good enough to talk with us today in relation to general information about investment bonds. So I wanted to start, Maria, with exactly what are insurance bonds?
Sure.
Yeah.
So insurance bonds or investment bonds are a tax structure. So it's a tax structure that can provide solutions for your clients and for yourself to look at medium to long-term goals. So the tax structure itself still gives you the option of investing in all investment options across all asset classes, and then being able to achieve medium to long-term goals. So there's really tax benefits after, say, the 10-year period.
Okay, so who are they generally suitable for?
Sure.
Who would be considered for investing in a bond?
Absolutely. So being a tax structure, there are tax benefits, especially for your higher income earners. So the maximum tax paid within the investment bond is 30%. So if you're paying 47 cents marginal tax rate, there can certainly be an arbitrage there. But really anyone who wants to meet those medium to long-term goals.
Okay, so are they suitable for, besides tax, would they be suitable for some, let's say, estate planning purposes?
Absolutely. So there's other nuances about the bond that can really help your clients achieve goals in terms of estate planning. So there's real flexibility about ensuring how your wealth is going to be transferred through the investment bond as well.
Okay, so like superannuation, do they have a lot of different investment options that you can consider?
Absolutely.
Based on your individual investment needs?
Yeah, that's exactly right. So we have 49 investment options in the Generation Life investment menu. Sam and the team at Bamboo Wealth will be equipped to monitor and assess your risk profile and which investment option is tailored and suited to your needs. But we do have flexibility of switching investment options without creating a tax event as well.
Yeah, that's a big disadvantage, isn't it?
Absolutely.
Yeah. And also, how do they compare to superannuation as an investment vehicle structure?
Absolutely. So we don't try and compare ourselves directly with superannuation. We like to work alongside superannuation. So unlike superannuation, you can actually access the investment bond at any point in time, so you don't have to wait until you're over 60 or retired.
Yeah, okay, it's a big benefit in terms
It
of
is.
people who need their money for. Would that be what kind of purpose would that be suitable for?
Absolutely. So maybe, for example, if you're looking at cutting back your working hours at say 55 or something like that, you could draw an income from the investment bond, and you can cut back your working hours without needing to supplement your income. So that might be a pre-retirement strategy that you might look at using it for.
Wonderful. And also, in terms of children, over the years, it's a very common strategy because these bonds, my understanding, have come from the life insurance annuity history.
Yep.
So are they still quite favourably used for investing or building education bond or funding for children?
Absolutely. So that's probably one of our more popular strategies. It's probably our top 3 strategies. We see lower denominations starting. So when your child is 0, 1, 2, you might start putting away some money and watching it and continuing to contribute to it. And then after that 10-year period, drawing down on it, say, to pay for school fees. Or if you decide not to do that, maybe it might be for their house deposit as well. So there's complete flexibility around what you can do with it.
Okay. One misconception, they say bonds are tax free. Could you expand on what that exactly means, if it's true?
Absolutely. No, unfortunately, they're not tax-free. We would love to have them being tax-free. However, after 10 years, what you can actually do is pull out all of the money from the investment bond without without having to declare income on your tax return. So
Okay.
you pay tax as you go through the bond whilst you remain invested, but after that 10 years is the sweet spot.
Okay, yep. And one of the benefits too is that with bonds, you don't have to submit a tax return.
Mm-hmm.
And so who would that generally be suitable for from your experience?
Absolutely. So this is where it really starts to help with your estate planning and maybe your clients who maybe don't want to have the high maintenance needs of having to declare tax returns every year. So with investment bonds, you're still earning and generating growth within the investment bond. However, it doesn't actually distribute. It doesn't actually form part of your tax return because you're not receiving your money in hand if you don't request for it to. So that just means that you're not actually having money in hand, which means there's no income, which means you don't need to declare it on your tax return.
Okay, so speaking of taxes, we've touched on that. How do they vary in terms of other investment vehicles like superannuation or investing in your own name? In a managed investment fund, for example?
Absolutely. Yeah. So with the investment bond, the most amount of tax you're ever going to pay within the investment bond is 30%. So whereas when you're investing in your personal name, it can be through your marginal tax rate. So this is where it comes back to your 47% marginal tax rate payers, where they're seeing that arbitrage through the investment bond as well. With superannuation, you may be paying 15%. So super may be the more favourable vehicle to go to first, and then you might look at us secondary.
Okay. Yep. And how are they treated for Centrelink purposes? Are there any favouritism at all?
There is. So if you have clients or if you're affected by the income test, what we actually have is a trust structure where an investment bond can sit inside this trust. And it's actually exempt from the income test for Centrelink, so which means you can get more pension, you can decrease your means tested fees. It does get a little bit complicated though, so I would recommend you to speak to your financial advisor about that.
Okay, and in terms of speaking of Centrelink, we also need to consider aged care as a purpose. Is the treatment also favourable with aged care recipients, people planning to go into aged care facilities?
Absolutely, definitely. So you can look at helping out people who are moving into home care packages and things like that. When you're paying a means tested fee in your aged care facility, this trust structure can actually help decreasing those means tested fees as well. So there are definitely calculations that Sam or the team at Generation Life can run, and we can have a look into it.
Excellent. And who can own a bond? Who can purchase a bond?
This is the beauty of the investment bond, is its flexibility. So any legal entity can actually own an investment bond. So you can hold it in your personal name, you can hold it in your family or discretionary trust. And what you can actually do is transfer ownership of the investment bond at any time as well. So if you have a husband and a wife, for example, you pop it in the wife's name, you can move it back again. It's complete flexibility around what you can do with it. And this is where it works really, really well with intergenerational wealth transfer as well. If you're a grandparent, you're looking at setting up an investment for the grandchild, you can actually nominate a future date for it to transfer ownership from themselves over to the grandchild for them to receive that asset with no tax implications on that transfer.
It sounds like there's a lot of features there that you need to consider.
There is.
One other one that I've come across is asset protection. How does that work for someone investing in a bond?
Absolutely. So investment bonds are actually completely creditor protected as long as they're set up in good faith, of course. However, they are drawn into family court, but they do work really, really well with blended families. So, for example, people may want to leave more money to their biological kids rather than their stepkids and things like that. Investment bonds also sit outside of the estate of the client as well, which means we've never had a bond be successfully contested either. So
that's great to hear.
Yeah, it's really, really good. So it's you can utilize it as a vehicle to ensure that your client's wealth is transferred exactly how they want it to go.
Okay, wonderful. Well, I think that's pretty much what covers our fundamental information about investment bonds. Maree, thank you very much for coming in today. We appreciate your professional feedback. And that's it for another episode of Financial Planning Matters at Bamboo Wealth. We look forward to seeing you again. Thank you, Maree.
Thank you.
Thank you.